Before you jump in and open just any account with any broker, let's quickly highlight the essential factors you need to consider when choosing a forex broker in New Zealand. Foremost among these is regulation. Ensuring that your broker is properly regulated and overseen by the Financial Monetary Authority in New Zealand, FMA, is not just a suggestion. It is crucial for your fund security. Because FMA regulated brokers separate your funds from their own funds, that is, they provide the segregated bank account, and they also offer negative balance protection benefits, ensuring that no matter the level of market slippage, your account balance can never go below the negative balance. That is to say, you can never owe the broker no matter your level of losses. Beyond regulation, you will want to look at their trading platforms. Is it reliable? Is it user-friendly? And is it equipped with all the tools you need? You also need to look closely at their spreads and their fees because competitive pricing directly affects profitability. Consider their range of tradable instruments, the quality of their customer service, their risk management tools, and other trading conditions. Thinking through these points upfront will set you up for a more confident trading experience, and that's where we come in. We've done our research and we've put together a list of best forex brokers in New Zealand, sifting through the overwhelming number of forex brokers in the market and putting into consideration the factors earlier mentioned, but the decision is still up to you to make. And if you find any of the brokers on this list that they meet your trading needs, check the description for a link to sign up. Yes, all the brokers on our list are FMA regulated, but let's show you how we got to know. First, we logged on to the FMA's website on fma.gov.nz, and then at the top left, we clicked on Finance Professionals. At the menu bar above, we clicked on Licensed and Reporting Entities. We searched for the broker of our choice on the search bar, which is Zero Markets. And by the way, Zero Markets is one of the brokers on this list, so you may want to stay with me to the end to find out what Zero Markets offers. Okay, you can now see the license details of Zero Markets like its FSP number and others. But to see its full FSP details, we went back to the search page and clicked on Financial Service Providers Register here. On the Financial Service Providers Register's homepage, we clicked on Search for a Financial Service Provider. Then we searched for Zero Markets on the search bar. Here you can see Zero Markets details, their addresses, their financial services, and their filings over the years. You must carefully check for the FSP status under General Details. Be sure it is active because some brokers might be deregistered, but their details might still be on the FSP register. Also confirm that the broker's name, FSP number, and address corresponds to the details on the broker's website. Having reviewed a number of brokers in countries like UK, Canada, Singapore, and other countries, we know that as a matter of regulatory compliance, brokers must be a part of a compensation scheme according to their region, giving traders some sort of protection for their funds in cases of brokers' liquidation or bankruptcy. But unfortunately, in New Zealand, there is no dedicated body or compensation scheme set out to give traders this protection. In most cases, retail clients, who of course have their funds in a segregated bank account, will receive their share of their segregated funds in cases of this bankruptcy or liquidation. This on its own calls for caution while you trade. Since we now know why it is important to choose an FMA regulated broker and how to identify these brokers, let's head right into the review. To start off the conversation, let's talk about CMC Markets. Being one of the oldest brokers, CMC Markets was founded in 1989 in London, and it is one of the London Stock Exchange listed company. It started operation in New Zealand in 2005 and later obtained its FMA license in 2014 with FSP number 41187. Let's take a look at what you can trade on CMC Markets. You can trade over 12,000 tradable instruments. Now, this is one area where CMC Markets has advantage over all other brokers on this list, as it has the highest number of tradable instruments. These instruments include over 300 forex pairs, over 80 indices, over 100 commodities, over 35 cryptocurrencies, and over 10,000 shares. You can trade these instruments on CMC proprietary next generation platform, which is available on web and mobile devices, and then MetaTrader 4 that comes with algorithmic trading and expert advisors, among other features. And lastly, the TradingView platform. But before you can trade these instruments, you will need to open an account. The account types that CMC Market offers are the standard account and then the FX active account, designed for high volume traders. Both accounts are for retail traders and they have a stop out level of 50% with leverage of up to 1:500. This leverage is on a really high side, which calls for caution in trading using leverage, because as much as you can make so much money with leverage, you can also make so much losses. The Alpha Premium Trading Services grants professional traders VIP services if only they meet the set out requirements. While the standard account is best for beginners and intermediate traders, offering spreads starting from 0.6 pips for major currency pairs like the Euro USD pair and other pairs like the Euro New Zealand pair from 5.6 pips and no commission, the FX active account offers raw spreads from 0 pips on 6 major currency pairs with a commission of $2.5 per lot per side, making it a round-top commission of $5 for Forex trades. Meanwhile, they generally charge commissions for share CFDs that differ based on the country shares you wish to trade, like a minimum charge of £9 for UK quoted shares and $7 for New Zealand shares. From 6 p.m. New York time, you will be charged or paid holding or swap costs for all your open CFD trades. But before you can view the price data of certain instruments, you will need to pay a monthly market data subscription fee depending on the instrument. Leaving your account dormant without any trading activity for 1 year will attract a monthly inactivity fee of $15. And then for risk management, to ensure that your trade is closed at the exact price you set it to close, regardless of market volatility, you may need to activate the guaranteed stop loss order, which comes at a premium charge. Also, there is a 1.5% charge for both credit and debit card payments. Your initial deposit can be made through bank transfer and Poly, while subsequent deposit can be made through credit and debit cards and PayPal. But if your account is approaching margin call, deposit requests can only be made over the phone, and they have no minimum deposit requirements. There are tailored training and comprehensive courses for traders of all levels, learning and platform guides help both new and experienced traders enhance their skills and trading strategies. You do not want to trade with a broker that you cannot reach in situations where you need their assistance. CMC Market has made available live chats, both local and international phone numbers, postal address, email, and a message request form for you to reach them in such situations. You can also walk into their office, or you can check out their FAQ sections for questions, or maybe if your question might have been answered there. Up next is Plus 500. Having begun operation in 2008, Plus 500 is also a company that is publicly listed on the London Stock Exchange. It is a London-based broker that expanded into New Zealand in 2016, and it is FMA regulated with the FSP number 486026. But it is also regulated by brokers in other countries like Cyprus, UK, Singapore, and the rest, and they offer over 2,800 tradable instruments including indices, forex, commodities, cryptocurrencies, share CFDs, option trades, and ETFs. Retail traders can open a CFD account that can be traded only on their proprietary trading platform, but professional traders can enjoy their premium services package that comes with special benefits. Traders who prefer using third-party platforms like MetaTrader 4, MetaTrader 5, cTrader, and TradingView may not find this convenient because it can limit their familiarity and flexibility with those platforms, as well as limit their access to certain trading tools, and it can potentially make trading less effective and more restrictive for traders, especially those who rely on specific tools to develop their strategies. You can trade with leverage of up to 1:30, and they do not charge commission as they are mainly compensated for their services through the spreads they charge from 1.6 pips for Euro USD pair and the Euro New Zealand pair as 2.5 pips. They charge overnight funding or swap fees for overnight open positions, currency conversion fee when you trade in a currency different from your account-based currency, guaranteed stop loss order premium when it is triggered, and a $10 monthly inactivity fee when you do not log into your account for 3 months. Meanwhile, deposits and withdrawals are free, except bank or service provider charges. Unlike CMC market, they do not charge fees for viewing the market data of certain instruments like shares. And in addition to their risk management tool earlier mentioned, which is the guaranteed stop loss orders, they also offer the take profit orders or the close at profit orders. Meanwhile, payment methods like Visa and MasterCard credit and debit cards, PayPal, bank transfer, Skrill, Apple Pay and Google Pay are all available. Their minimum deposit and withdrawal depends on the payment method, like its minimum deposit for bank transfer is 500 New Zealand dollars, while others are 200 New Zealand dollars, and its minimum withdrawal ranges from 75 to 200 New Zealand dollars. Just like CMC market, Plus 500 has made available trading courses, guides, webinars, ebooks, and other resources needed for your trading knowledge and skills, like their Plus Insight that allows you to analyze other traders' trends or activities before making a trade. Why this is good? You may need to understand the market peculiarities carefully before you can make your decision based on other people's trading activities. Although you can get a number of answers to a number of your questions through their FAQ section, you can also contact them via live chat, email, or WhatsApp. Up next, let's talk about BlackBull Market. BlackBull Market is an indigenous broker that has its headquarters in Auckland. It was established in 2014 and it has an FMA license with FSP number 403326. So it is said to be safe for New Zealand traders, but it lacks the regulatory backing of some top-tier regulators. Trading with BlackBull Market gives you access to trade tradable instruments like over 65 Forex pairs, over 1,700 equities, over 10 commodities, over 10 indices, over 15 cryptocurrencies, and futures trades on indices, commodities, and Forex. Unlike CMC markets and Plus 500, beginner and advanced traders have the liberty to choose from 6 trading platforms, which are TradingView, MetaTrader 4, MetaTrader 5, cTrader, BlackBull Copy Trader platform, where you can leverage on the expertise of expert traders by copying their trades or get copied as an expert trader, and then BlackBull Invest platform, where you invest in stocks and not in CFDs. BlackBull Market offers ECN accounts. But before we go further to talk about the different account types they offer, let's answer an important question, which is, what distinguishes ECN accounts from other account types? With the ECN account, trades are executed through the Electronic Communication Network ECN, thereby connecting traders directly with liquidity providers like banks and other brokers, resulting in tighter spreads but often with commissions per trade, with brokers acting as facilitators and not as counterparties. That is to say that there is no dealing desk intervention. While other non-ECN brokers, they act as counterparties to trades and they control pricing and liquidity. That is to say that there is the intervention of the dealing desk with spreads that are wider but with no commission. While ECN account types are best for experienced traders, algorithmic traders, scalpers, and day traders, the non-ECN accounts are best for beginners, intermediate traders, and traders who seek a simpler pricing structure. Back to BlackBull Market account types. They include the ECN Standard account, which is their best account for beginner traders, the ECN Prime account, which is best for professional traders, and the ECN Institutional account, which is best for high volume traders. And on all account types, BlackBull Market offers a maximum leverage of 1:500 with a minimum trade size of 0.01 lots and a margin call of 50%. Spreads on the ECN Standard account starts from 0.8 pips for major currency pairs, while spreads on the ECN Prime account starts from 0.1 pips, and that of the ECN Institutional account starts from 0.0 pips. As at the time of making this video, Euro New Zealand pair was 2.7 pips. You will be charged a standard round-turn commission of $6 per 100,000 US dollars traded on the ECN Prime account and $4 per lot on the ECN Institutional account, which can vary, but no commission will be charged on the ECN Standard account. Swap-free benefits are available on the ECN Standard and Prime accounts, while you will pay a swap fee for leaving your positions open overnight while trading with the ECN Institutional account. Generally, their fees are quite low because they do not charge currency conversion fee, no inactivity fee, and no market data fee. And for risk management, their guaranteed stop loss orders premium is not charged because their stop loss orders are not guaranteed. That is to say, your stop loss order will not stop at the exact point where you set it, but then they also offer the take profit orders. Their payment methods include Google Pay, Apple Pay, Visa card, Skrill, Neteller, bank transfer, and MasterCard. Although BlackBull market does not require any minimum deposit, the payment method's minimum deposit ranges from $1 to $50, while the maximum deposit is from $50,000 except for bank transfer with no limits. The BlackBull Research is a daily investment research portal for New Zealand and Australian equities research with a global view and in plain English without trading jargons. It also involves podcasts, but you have to pay a monthly subscription fee to view most of their research. The Academy Hub consists of tutorials and courses for traders of all levels, and then their webinars. Their customer service is localized, that is, it is not outsourced, which is good. Email, phone number, live chat, WhatsApp, and inquiry form are all the available mediums through which you can contact BlackBull Markets, or you can check their FAQ section for quick questions and answers. The next broker on our list is Zero Markets. Established in 2017, Zero Market has an FMA license with FSP number 569807 alongside other licenses from countries like the Mauritius and St. Vincent and Grenadines. If you are looking for the Trademarks Global Market, which is TMGM in New Zealand, you may not find it because it has been acquired by Zero Markets. This acquisition took place in September 2024. So TMGM is now known as Zero Market in New Zealand. The number of instruments you can trade on Zero Market includes over 50 forex pairs, over 5 commodities, over 3 metals, over 15 indices, over 400 share CFDs, over 10 cryptocurrency CFDs, and over 15 ETFs. Take note of the cryptocurrency that it is a CFD. That is to say that you do not own the underlying assets and you do not need a wallet to trade it. MetaTrader 4 and MetaTrader 5 platforms are available for trading with their distinctive features like auto chartist and also VPS for automated trading with expert advisors or algorithmic trading. And they will sponsor the VPS for you if you trade up to 10 lots on the standard account or 20 lots on the Super Zero account. We will talk about the account types later. While you can trade micro lots of 0.01 lots on Zero Market, you can only trade a maximum of 50 lot sizes per trade on Forex. Meanwhile, their margin call is 100% with a stop-out level of 50% and a maximum leverage of 1:400. The account types for retail traders are the standard account and the Super Zero account, with the standard account having commission charge of 0 New Zealand dollar, but with spreads from 1.0 pips, and then the Super Zero account charging commission from 4 New Zealand dollars per lot per side on share CFDs and ETF CFDs, with raw spreads from 0 pips. While the average spread on the Super Zero account for the Euro USD pair is 0 pips and the Euro New Zealand pair is 18 pips, which is high, on the standard account, average spreads for the Euro USD pair is 12 pips and that of the Euro New Zealand pair is 38 pips, which are really high. A monthly account maintenance fee of $30 may be charged if the balance of your account is below $500 of account currency and your account is inactive for more than 6 months. You will also be charged a currency conversion fee for the conversion of profits or losses in a currency different from your account-based currency. They charge or pay swap fees or rollover fees for overnight open positions, and no deposit fees are charged, but you will be charged withdrawal fees depending on the withdrawal method you choose. Meanwhile, Visa and MasterCard credit or debit cards, Apple Pay, Google Pay, Neteller, Skrill, Bankwire, and Polypay are all the acceptable payment methods, and their minimum deposit requirement for trade is 20 New Zealand dollars. While their stop loss orders are not guaranteed, take profit orders are available. Zero market is not like CMC markets, plus 500 or BlackBull markets that have a designated area or a tab or a hub that is full of educational resources. They have made explanations about most of their services in every section on their websites, and their FAQs are very, very comprehensive. But then their resources remains limited because they do not have certain resources like workshops, seminars, ebooks, or even news and analysis and researches. Nevertheless, you can make further inquiries, lay complaints, or ask questions by visiting their office, or you can have a chat with them on their live chat, or you can call them through their local phone numbers, or you can send them an email. As you navigate through this list to find a broker that suits you, don't forget to look out for their FMA regulation details, their competitive spreads and fees, their trading platforms and their trading conditions that really fit your trading style, and a reliable customer support. Prioritizing this factor is key to building a solid foundation on your trading journey. But most importantly, make sure that these brokers' offerings aligns with your trading goals. Demo accounts can be a sure way to test not just your trading strategies, but also how these brokers operate risk-free. And just so you know, all the brokers on this list offer demo accounts, so you can give it a trial. And when you're convinced you're ready to go into live trading, do your due diligence and make necessary research. The sign-up link for any of the brokers we've reviewed in this video is in the description below. Have you got any questions? Leave it in the comment section below. We'll be glad to respond to you. And if this breakdown has been helpful and you'd like more insights and brokers review to help you make informed trading decisions, make sure you like this video, subscribe to this channel, and visit our website at forexbrokers.com/nz so you don't miss out on resources that are designed to help New Zealand traders like you. Until I come your way again, happy trading.